Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
It's your boy Andy, and welcome back to the DeFi Slate YouTube channel. Smash the like button on this video, that really helps us out, and sit back and enjoy the content. Thank you very much.
What's going on, guys? Welcome back to episode 90 of the DeFi by Design podcast. I'm repping the DeFi Slate merch today. Go and buy yours for 3,000 ETH for one shirt at our store at defislate.com. No, I'm kidding. We're here today in the midst of some chaos in the market and the world. We've got FTX that just collapsed the last couple of weeks. We are just in a absolute matrix of a world, as you could call it. But excited today to dive into kind of a big topic of the previous kind of excitement in crypto, which was play to earn, GameFi, and kind of bringing users into the blockchain Web3 era through this kind of concept, because I think there's a big connection from that world and crypto, and kind of bringing those together is going to be really interesting for the future of our user base. So yeah, Rob, excited to chat more about gaming and anything else that we can come up with, man. How are you?
Totally. Yeah, doing well. So I'm happy to be here. Happy to have Matt on the show today and chat about all things GameFi. I think it's one of the things that, has really, that blockchain has really taken by storm. And then there's a few other pocket industries, but today we're going to focus on GameFi and all the benefits and improvements that this newest Web3, that's the narrative, but all the technology and benefits underneath the hood can improve the GameFi industry and really take it to the next level. So our expert of the day in the room here is Matt of Decentral Games, and I am happy to pass it over to him and let us kick it off. So how you doing today, Matt?
Doing great, guys. Calling in from sunny London. It's always bright and sunny over here. Things are good in spite of what seems like continued chaos of the crypto markets right now. But, we're fortunate enough, at least personally and as a company, we haven't been directly impacted with the latest saga of crashes. So silver lining at least. But we're kind of heads down over here. Nice.
So to start off, do you like the term of GameFi, or do you think it's cheesy and corny and not accurate, or do you think it's good?
Yeah, I try not to get too hung up on terminology. I think it's certainly been very accurate for kind of the subset of Web3 that we're kind of discussing, right? Because it has very much been, I think, especially last year, it was a bit more fi than game. I think a lot of the early games that came into the space that were just really focused on, I guess, driving as much attention as possible through crazy rewards were basically just DeFi protocols, right? With graphics in front of them that made it look like a game. And, that kind of has shifted out a little bit. But yeah, I think it makes sense, because especially when we have DeFi, GameFi, SocialFi, which is probably going to be another big kind of trend that we talk through, and a few other areas, it's easy to section it out.
How different do you think, and I'm gonna add some kind of color around this question, but generally, how different do you think DeFi is from GameFi? And the kind of context of that question is kind of this philosophy that finance is a game in a sense. And I'm curious if you agree with that. And if we kind of find common ground that finance is a game, are there winners and losers? And then what is the objective of this game? Or do you not really even see it in that light?
Yeah, to a certain degree, I agree. But I think one of the challenges with that a lot of GameFi projects faced coming kind of into this new space is they obsessed a bit too much on the financialization of gaming, right? Gaming is gaming. And if you want to attract the mainstream into gaming, the financialization of games is not the path forward to doing that, in my opinion. I think that can be one additional layer, but there's so much more value that can be created on top of existing gaming infrastructure outside of just purely like financial incentives. I think the conversation naturally leans towards that because we look at, like a lot of the most recognized names in the early stages of play to earn, the 𝗵𝗵𝗃𝗍𝗃 of the world, the 𝗵𝗵𝗃𝗍𝗃 of the world, right? And like, in all fairness, even Decentral Games, like we launched in October of 2021 in amongst the frenzy, and I'd be lying if I said that we didn't lean really heavily in at the beginning to the financial incentives. It was incredibly powerful for bootstrapping player liquidity, but utterly unsustainable to have as a long-term kind of piece of value. So I think it can get lost in amongst that a little bit. So I do think, certainly now, and in the past 6 months, we have seen this break away from GameFi and DeFi, and they're starting to decouple a little bit and be a bit more distinct. Prior to that, they were kind of one and the same, and there was very few interactions. Like, people were grinding for financial rewards inside the game, and that was it. That can exist, but that is very extractive. And when you're trying to build a game economy, there has to be like inputs as well as outputs. And I think in DeFi, you can have value extraction, but in many cases, there's always inputs. Like, the challenge often comes with like over leverage and things like that, when that creates like additional extraction. In game, like building game economies, they're so much more fragile and smaller. And I think that they're more prone to like larger swings one way or the other. So, there's elements here. It's an economy that you're kind of building, both within like a DeFi protocol and a GameFi protocol, but they are very different types of economy, right? That you're trying to focus on building.
Yeah, the financialization of games, I see kind of the picture you're painting, how they become kind of further away from what a game is really meant to be. And I think there's plenty to unpack. And you mentioned player liquidity. Like, I'm definitely keen on kind of diving into what that means. And before we do, maybe we can just touch on like the flip side of the financialization of games, taking it from the angle of instead the gamification of finance, because we kind of had finance, we had games, and they started to converge in this like Web3 like ecosystem by the games getting financialized and the finance getting gamified. So do you see that convergence kind of playing out over time, where they get like the line between finance and games kind of continues to get blurred? Or like, for the sake of games and for the sake of finance, should those continue to run in parallel?
So I'll actually start with, I think the gamification of finance is a net negative for kind of like the world. And I think that it can lead to really bad outcomes, some of which we've seen play out this year. But like, if we look at finance, there's two sides to this, right? Where it's like accessibility increases, but then openness to risk and understanding of risk also like increases. Prior to a lot of DeFi, I think earlier crypto was like the very early gateway drug into like open finance, where it's like, okay, before I had to, and even when I was like at the start of my career, like buying stocks was not easy, right? Like, when I remember when I bought Facebook stock at the IPO, and like, I still had to go through like a broker, and it was like a pain in the ass. Like, and that's not a long time ago. And now, pretty much like every app you can just quickly download. It's like, bang, let's go, Robinhood, whatever. Even banks, I can hop into Revolut and buy stocks, right? It's just like, it's super easy. But there was this friction that came prior to that was really annoying and like excluded big chunks of the kind of like general population. But it also created these like layers of friction that basically like in some cases was good friction, because people had to really think through their financial decisions. And while like that's not always the best way to curb some of this, I think we went like one level further. I think Robinhood is like the poster child for this, and they really did lead the way in opening up stock and equity investing to, in particular, like the Gen Z kind of and beyond, like cohort of individuals, and just kind of made it as easy as kind of Venmoing someone's cash. And it became synonymous. Like investing in equities is something that pretty much anyone that's in like college right now is probably doing. That isn't really what was happening even 10 years ago. So then kind of like prior to that, you had like Bitcoin and ETH, and at the time like Litecoin and a few other smaller kind of tokens where it's like, whoa, all of a sudden I can just buy these assets and sell them. They're really liquid. And there was still a few hurdles that you had to go through. And then the ICO boom happened in 2017. And then we kind of came into this like divide again, where a load of these ICOs were like, oh, you have to be an accredited investor to be able to invest in them, and these ones you don't. And then it was like, oh, okay, this is friction. And then DeFi just leveled it and just went, okay, not only can you now buy equities or whatever, right, nice and easy through Robinhood, or just buy basic like network tokens. Oh, you can borrow. You can play in futures trading and like more complex derivatives. You can leverage trade, like things start getting crazy. And it's like, in many cases, not only do you not even need to be 18, right? Like there are basically no levels of friction. So then it gets kind of like, all right, access is lower, education on like these primitives are really low. And then we start gamifying things, and then it gets really dangerous because people are like, oh, it's kind of like a game. It's like you hear the stories where like people have spent like thousands of dollars on like Candy Crush because they were just like, oh, it's just a game. Like I didn't realize, right? And, you know, that's not always a good thing, especially when people don't realize they're doing it. So I think that can be, it's like my very long-winded way of saying, like, I think what it does come with a lot of this, with gamification and the blend of finance and gaming, is a lot of education that needs to come for individuals. And I think that the NFT boom that came near the end of last year, in particular, that coincided with gaming, a lot of people had to kind of learn things the hard way. And it was like one of two camps: people that actually really wanted to play games, which were in the minority at that point, and people that wanted to speculate on the non-fungible assets, and they were the minority. The majority. And now it's kind of like leveling out, and, you know, there's less speculation, and it's much more about, okay, how do we actually just go in and create really interesting games people want to play, and then put the focus much more on, okay, and you can have ownership of these assets. And I think we're just starting to uncover what that actually presents in terms of value. But I still think it's very much untapped, and there isn't a lot of like understanding of what it truly means to kind of own assets from a value perspective.
Yeah, and I think you raise a good point about the speculative nature of the entire world in terms of just kind of the adoption of these apps like Robinhood, like crypto. You know, they're definitely in that. I read this book called Devil Take the Hymn. It's definitely in like the later stages of like an overall speculative kind of environment where men, women, and children are all investing and trading. And, you know, we kind of saw that boom, which is interesting because crypto has fed off of that. And you make a point that kind of the financialization of NFTs as well as gaming, you know, and just kind of making your finances as part of a game, which kind of we saw with DeFi, food farms, and then games, and then NFTs. Yeah. It didn't really end that great for a lot of people, right? You know, all of us,
for the majority of people, got burned as well,
on a lot. Yeah, like all three of us, I'm sure, got burned plenty of times, right? So it's like, yeah. So I mean, I think we're starting to see a shift though now, which is that NFTs, and I read a tweet about this, and I really agreed with this, that NFTs now, I believe, are not so much for the ability to make money off of them, because there's no liquidity there, no one's flipping. NFTs anymore. There's no buy this and mint this, and I mean, it's few and far between. Now it's kind of about history, community, and kind of being a part of this group, right? Like owning a CryptoPunk first NFT, owning an ape, right? Cool. Penguins, cool, right? There's all these different types that are now, like, I think truly starting to enter that collectible era. And I think this kind of segues into this thought that I have for you, which is, do you think that kind of bringing games to the masses in the blockchain world is going to kind of be this different era of onboarding, where it's not so much about the money, but inside of these games, there's collectibles and there's these own token economies that may potentially exist and thrive without the actual market, the price of Bitcoin or Ether or the S&P, rather the actual supply and demand of gamers and needs of different types of in-game assets, right? I'm curious what you think about kind of onboarding people into these economies that are almost silos of the broader crypto or blockchain world, and less so dependent on it, if you will, for a financial need, but kind of are just part of their own little world.
Yeah, well, I think you touched on an important point, which is kind of game economies. Like, they need to be able to be self-sustaining. And actually, this is something that's happened way before Web3, right? Like, there are many, many examples of game economies that have some form of in-game currency, and that can take many different forms, and there needs to be balance with that. The outcomes of imbalance can be very, very different, because like an economy kind of crashing, I think obviously the most famous example of like a Web2 more close to a Web3 economy of recent years is things like Second Life, right? Where they had like the Linden dollar in there, and it was like, I mean, it was artificially kind of floated in many cases, but it was like operating like a cryptocurrency in many cases. And I think that for gaming, though, you mentioned for a lot of the NFTs right now, like punks, apes, penguins, et cetera, right? What this is about is there's one level here that's speculation, but speculation only comes when there's like intrinsic value placed on those assets. And where that intrinsic value comes from is like ultimately feeling a sense of status and community in amongst this. I think gaming is like one of the best examples of where this happens, because if you look at the evolution of games, right, there's just been like some of like the core fundamentals of games have remained all the way through from like early console days, but we've just added these additional layers of value on top of the game experience that's largely come through technological developments, right? So you start with like basic console gaming, and it's like, okay, me versus the computer, right? I'm like, okay, like whether it's like Mario on the NES, I'm just playing basically against a computer simulation. And then as like gaming got a little bit better, and like the original PlayStation came in, it was like, whoa, graphics stepping up, computer AI is getting a lot better. This stuff's getting really tough. You're playing like Metal Gear Solid, and it's like, I'm just getting wrecked, right? But I'm not playing against other people until, oh, all of a sudden I've got like my buddy comes to my house and we're playing together with kind of gamepads. Then kind of something started happening where you've got, all right, things started in their very early stages going portable, right? Game Boy came to the scene, and it was like, okay, now we've got Pokemon, we can go. And there was this very early stage where it's like, I can connect this Game Boy to another Game Boy with this like really janky like cable, and we can like trade Pokemon, and like this is in-game assets, right? And like you, through trading, you could generate new Pokemon, you know, that's like minting and breeding. Like these are all of the basic premises, and they came through tech developments. And then came broadband internet connections, and it was like, holy shit, now we're at a level where we can play online multiplayer, and massive online multiplayer. And what the level of value that came on top of that, because you've already got the piece around, I've got these in-game assets, right? I've got these like valuable Pokemon from Game Boy, right? I've got these high scores all the way back from like arcade levels. And then in like World of Warcraft and etc., I've got these like really rare assets that I own. Now I can compete with other people. Competition's always been there though, at a bigger scale, but now it's a community. Right? It's like I have a social layer to this, where not only do I care about competing in the game, but I care about like the social aspect. I can meet people, I can chat to people. It's still kind of like confined, but when that kind of game dies down in popularity, well, so does the community and the social aspect. And ultimately, like game developers could just go, boom, we're cutting off the game, right? And it's like, bummer, right? Like all of my game assets gone, and I gotta like go buy the new version and start again. Damn, that's really shitty for me, right? Web3 comes in, right? And we're still in the very, very early stage of this, to take everything that's happened before, and we say, okay, and now you're gonna have this like massive online experience, but not only that, you're gonna own the assets in this game. And people are like, cool, I guess, but why? And I think this is where there hasn't been enough of an application, but is going to become much, much more, is this interoperability and portability. Okay, I take these assets, I take them out of the game, and I can bring them into another game, right? Or I have assets that don't belong in this game. I have a punk, right? And I love that. And I know that a bunch of other punks are playing in this game ecosystem. I go in and I can use my punk in that game ecosystem. It has utility. All of a sudden, I'm not only like having a new experience across different ecosystems, different games, different metaverse platforms, different social-fi experiences as well. All of these pieces start connect together so that it kind of doesn't really matter. And I start to change the direction of my experience across a whole host of different platforms. And then when you kind of think about how that really changes the social experience, you can build your own experiences in there. It doesn't need to extend to just games, right? This is like, okay, now I can kind of get access to events offline, online. I can maybe have like physical items that are able to be redeemed as a result of holding these assets. And it just kind of like starts beginning to create a whole new layer that actually is just not possible with Web 2. Like this is not possible to do with Web 2, not just from an incentive perspective, from a tech perspective. And that is the value proposition. We're still quite a way away from truly delivering on this, but I think this is going to be like the most common thing. Like today, the closest thing we have to this is that, you know, you'll have your Twitter profile and you'll sign in to different apps with Twitter. We don't really think about that, right? But that is like interoperability. That's portability. I'm taking my profile and I'm using all of like the information in that profile to create new entry points into different platforms, ecosystems, games, checkouts, the lot. This will begin to happen on an asset by asset level. And we'll start to see people getting very, very creative, where today game development begins with kind of like the game, the story, the narrative, and then you build the assets within it. Whereas like this is going to get turned inside out, and there's going to be popular games that appear that are kind of fun for a while. And, you know, most games have like a 2-year lifespan anyway. And then those assets, people are like, oh, I guess we'll build new games and new experiences around these existing assets. And they continue their life, and that community persists and grows and evolves bigger. I know I've been like rambling on for a while, but like I think this is like the story in my mind for the future of where GameFi Web3 gaming goes to, and why I think it's so valuable long term.
Yeah, it hits on a good point about community too, and I'll let Rob give his input as well here. That community is so available via NFTs and via these assets in games, and the ability to cooperate for outcomes that are beneficial, right? We've seen like multiplayer games already absolutely blow up in terms of like user cooperation. But if you can add on a different level of either a financial incentive or kind of a overall better community incentive through NFTs, collectibles, things like this, you kind of take the traditional era of gaming and you add another layer to it, which really boosts the community aspect, which I'm definitely excited about overall. Yeah, Rob?
Yeah, I think as those worlds start to collide in terms of interoperability, where a Twitter profile is now, you know, used to log in, and all that information is ported into another like application world. When those start to form into token economies, those like tokenized worlds start to collide, and as they do, the biodiversity of the internet starts to expand. where now we have like a Twitter profile interacting with like a Google profile, and that's completely Web 2. But then you have a Twitter profile interacting with, you know, a CryptoPunk NFT, and now that spawns like a whole new set of applications and functionality that is born from the combination of a punk and a Twitter profile. And, you know, we have like some of the biggest Web 2, like most prominent Web 2 companies starting to include wallets into their applications. Instagram, right, is now like letting you like connect your Rainbow wallet and kind of like hold NFTs in your Instagram account. And as like the portability of, I think that's a great word, because it just kind of shows how mobile like these assets are. And now they're also irrevocable, where even if a game shuts down, like they're not taking those assets from you and telling you to upgrade and then start all over. You just take those assets from your one application. Not only can you take them to a new version of that application and continue to hang on to them, you can take them to an entirely different application, combine them with the assets of that world, and now you have the diversity between the original world, the new one that you're combining it into, and then you can start to do that across, you know, magnitudes more of applications beyond 2. You can do that to 3, 4, 5 applications. Take, you know, the punk or the punk plus a penguin, take those over to Twitter, take those over to Instagram, and now there's like so many combinations of multiple different worlds. As they start to collide, there's, you know, greater possibilities and just greater levels of social coordination that can arise from combining multiple different communities.
Agreed. And, you know, I think this piece around just everything starting from like the assets is a lot for any regular gamer that's a non-crypto native to, first of all, get their head around, and also like for most people to even see the value in today, because I think like the world we're going to live in over the next 10 years is going to change dramatically. And I think the past 10 years that we've seen an accelerated rate of growth when it comes to tech, in particular, and consumer tech, but most notably, the way that we socialize online has changed enormous amounts. Probably more so, I'd argue, in the past 10 years than the previous 50. And it's really kind of changed a lot about like the way society in general likes to spend their time and communicate with one another. With gaming and thinking about how we get to this point of like having portability and everything can be like switched across different platforms and combined together, like this is the goal. One of the big roadblocks right now, and I want to come back to the whole wallet piece, by the way, because I think that's a whole thing to unpack. But one of the big roadblocks right now is everyone's building walled gardens, right? Like the irony of like decentralization and being like at the forefront of a lot of not just Web3 but crypto is the astonishing amount of like walled gardens that are being created that aren't like interoperable or like collaborative first. You have the race for the metaverse being the prime example of this. Like, of course, like Meta and co want to create another walled garden. That's kind of expected. But even like open metaverses, Decentraland versus the Sandbox, right? Versus even like Other Side by Bored Apes, they're all building on their own game engines. They're not actively looking to support like interoperability between the two. Most games right now that are being built on Web3 are building on their own kind of private game engines in like a closed loop environment. And sure, like some of this stuff can be taken out and built and placed elsewhere, but it gets tougher and tougher when things aren't built with this in mind to begin with. So I think that's going to change a little bit and it's going to kind of blow up. And I think next year, what a lot of companies and those in the gaming space and also in the regular consumer tech space, one of the big narratives I think we're going to be talking a lot about is owning the whole wallet stack. There's a lot that's kind of happening here, and like the wallet is a huge point of friction for onboarding even Web3 users. Like wallets suck. Like they're the absolute worst. Like I think we've like grown accustomed to using things like MetaMask and stuff, but if you actually take it a step back, it is horrendous experience. Like, especially if you're even using like a hardware wallet, stuff like that, like to get that out, like mobile experience is basically non-existent, right? And what we're starting to see is, okay, like traditional tech and big players in the space, Reddit being a great example, building their own kind of fully managed wallets in their like Reddit vault. The data that they have within that is incredibly powerful, and owning like the full wallet stack versus just integrating like other wallet providers is pretty valuable when it comes to having more and more data to be able to use, especially if you're building games or DeFi protocols, right? So I think this will be talked about a lot, but one of the first hurdles that needs to be overcome outside of the interoperability piece is just how do we get more of the more gamers into games by removing the hurdles of onboarding, because it's a high friction process right now.
Yeah, wallets are a big thing. I mean, that's why FTX was such a disaster, man, is because it's just such a process to do self-custody still.
Yeah.
It's just a pain. I mean, the best solution that we've came up with is multi-sigs that are, easy to kind of maintain, but even those are just a pain to do confirms and like kind of figure out how to have the right amount of signers and all of that. And then hot wallets are just freaking not safe. And then centralized exchanges, who knows? So it's like, man, so yeah, definitely custody but from an onboarding perspective, the custody and the wallet experience is more of like making the interface easier to understand. So somehow making the kind of onboarding experience similar to that of a fintech app, right? I think would be kind of a big step forward. By the way, congrats on the 2nd anniversary of Decentral Games. Saw the tweet here. Looks good.
Yeah.
Definitely down to talk about that. So how are you guys framing your application in game kind of for the onboarding of crypto users, as well as kind of folks who are new to the space, who are just either poker players or gamers?
Yeah, so we're at this like interesting intersection, right, of like crypto and poker, which, surprise, surprise, quite a big like overlap in the Venn diagram there. So we, for anyone kind of watching and listening that isn't familiar with what we do at Decentral Games, we have our flagship kind of game, which is Ice Poker, which is a kind of free-to-play poker game similar to like a Zynga poker of the traditional world, where you're not actually like playing cash games and betting, but it has like a full game economy around it. We're built initially inside Decentraland. We account for the majority of Decentraland traffic, around about 60%. And then we also have a separate web app that is like our tournament mode kind of game. And so on one hand, right, like one of the reasons why we built our own kind of web app, and eventually we'll have like a native app once the whole industry figures out how the hell we deal with the Apple situation, right? But we realize, onboarding is really, really difficult. Onboarding people into a 3D metaverse is close to impossible. Yet we somehow managed to get like at our peak, like tens of thousands of daily active users, which is a huge achievement in itself. Like we nearly broke Decentraland. And like we realized to kind of scale, and we needed something separate that pulls in areas of like Decentraland, but we need to make this wallet experience better. And, the kind of the cliche of like the bear market being time to build has actually been somewhat of a godsend for us, because we have been just heads down, double down without distraction on solving for this. So, okay, how do we like take out just like start with supporting as many wallets as possible? I think next week we're about to launch a full integration with like Web3 where we kind of have our own like custom wallet solution, credit card checkout as soon as you go in, so you can hop in, buy an NFT, go through it. And like our NFTs are like, they'll give you access to tournament stuff. It's like $5. But buying that in our native token is a pain in the ass, right? Like we're on Polygon, so you got to bridge to Polygon. Like the moment I even have to say that, Web2 users are out, right? It's like most Web3 users are. We've been integrating with a great platform called Bridge, BRYDGE. I have no affiliation, by the way, to any of these products that I mentioned, but it kind of manages like end-to-end bridging in like a really simple way. So again, we can get people easily to get the assets they need to start playing the game. So they don't spend 90% of our time explaining crypto and 10% the game. And like it could be like the other way around. And if anything, it could be like 3 or 4% crypto and the rest be about the game. So that's been kind of like our big focus, is just like, how do we cut down these steps? How do we not make people have to think about and worry about a wallet? And introduce like self-custody, maybe even a little later down the line for people. Because yeah, the reality is most people don't even want self-custody. Like, it's a burden. Yes, it's great, but the experience really sucks right now. And as someone that kind of like bought their first crypto in like the end of 2016, start 2017, it hasn't got any better. If anything, I preferred when I used to just use paper wallets. Like, it was a bit easier, right? Like, I used to just be worried that this piece of paper would like set on fire or something. But, you know, now I'm just like consistently worried that like my MetaMask is getting like scammed. I'm going to come into like phishing stuff. Even with my Ledger gets hacked and gives away my email address and address, which is great. You know, it's like, it's just horrendous. So it's just like no good thing. You try to explain that to like everyday person. There's a reason why we use banks. And it's because having cash under the mattress is a fucking nightmare, right? So I think like we need to kind of get more progress on this side of things, and the wallet needs to just sink into the background, and so people can focus on the actual thing they want to do and not clicking like a million confirmation messages and trying to get their like PIN number incorrectly into the hardware wallet and everything like all day, and you've got like a repetitive strain injury from like clicking right on your ledger until you hit approve, right? So it's like, you know, these kind of things need to just go, basically. So we're trying to like work within the realms of what's possible, but building towards that kind of moving forward.
Yeah, it's kind of like we got ahead of ourselves with Web3, trying to do like all this, like even like sign in with ENS, sign in with Ethereum was a narrative going there for a while. And we just didn't even master like the Web 2.5, like sign into this Web3 game with Twitter or Google or Apple. And like, those are like the wallet options, if you will, with the most users, and they have like the most accounts. So it's just most natural for a user to step into a Web3 type game with one of these pre-existing sign-in options.
Agreed.
Yeah.
Just go ask a boomer to, like, for the first time, use Apple Pay. And then you will see, which is, in my opinion, one of the most beautifully designed, simple, but complex products that exists. It's like the biggest no-brainer you'll ever have to use Apple Pay. For years now, I have just never used a wallet. I don't own a wallet really that I take with me anywhere. I just have my phone everywhere. It's my life. Like, my parents cannot fathom the fact that this happens. And, you know, like when you go and you actually just take a little refresher and say, for someone that's not used it, that isn't kind of from like at least millennial era, like getting them set up on Apple Pay, like then you realize, imagine trying to have them custody assets. My parents like have their like bank details written on pieces of paper that they'll like in like the most ridiculous settings. Like, I hate to think how they would manage private keys. So, you know, there's a long way to go, basically.
Yeah, it seems like there's kind of two paths available. There's like the right now we are kind of like in Web 2.5. People don't really want self-custody. They don't really realize kind of like what the pitfalls of like just Twitter logins and like having, digital assets owned as part of like that Twitter or Facebook account, like kind of the potential damage that could cause. But we're still kind of in that that phase where people are still like, accepting of that because they want to try a game. So we're in like that Web 2.5 stage, it seems. And then to get from Web 2.5 to Web 3, where like it is truly self-custody, someone has, private key management of some sort. There's either going to be the social recovery way of like, that's kind of the way to manage keys through social recovery, delegation and kind of like backstops of losing any passwords or keys. And then an alternative path, maybe it takes solving that Apple kind of like friction as well, where there's like built-in native like wallet ownership into the physical hardware. And just like, Apple Pay is just built into Apple with, just double click the side button. maybe triple click the side button and you have access to like your digital assets rather than your fiat assets. And that private key management is just stored right locally in the machine. And maybe it's maybe a combination of the social recovery and the hardware wallet. I know Solana, has like its own phone that it's launching.
Yeah.
And it seems like maybe those are two paths to kind of mass adoption of self-custody. Maybe you see a combination of those and others that can ultimately bring the masses onto like Web3 applications securely, safely, so that they have ease of access and it's a smooth user experience.
Yeah, I think, we were talking a little bit earlier about this evolution of gaming, right? And like the introduction of new technologies that kind of came into play to actually like have like big kind of unlocks along the way. I think this is another case where this is going to be pretty prominent, for sure. I just think that there's still a lot of work that needs to be done for us to get kind of close to this, to be honest.
Yeah, it's a long and winding path. Web 2.5 is really kind of only on the pretense of it. We're still not even able to sign into most Web3 games with Twitter or Apple or some Web 2 login. So the idea of self-custody and locally stored wallets, I think is probably years, if not longer down the line.
I think that we're going to see. So I think what Solana are doing, while I actually think that the Solana phone will fail, this is like my opinion. I put a deposit down on them just for like the history of owning one of them, which will be hilarious, I think. Similar to my purchase of the Snapchat spectacles, which I also thought was a hilarious purchase at the time. But like these pave the way towards new patterns in like what becomes normal. There's very few examples over time where there's been like just this one like first mover has actually like completely innovated and take it forward. I think like probably the only example of that I would say has happened of modern times has been the iPhone, and pretty much everything else has not been the case. It's been like the things that have followed after, and people have slowly developed a pattern towards kind of getting there. And I think this will be the case with what I'd kind of like pretend is like almost like decentralized phones or like blockchain ready phones. I don't think we're going to call it that. I think it's just going to become more natural. I also think that more banks will, in this like 10-year time horizon, we will start to see digital assets being held within your native bank account, which like, the irony of that is obviously not lost on me. But most people will prefer it, right? We're going to see huge waves over the next 5 years of central bank digital currencies, which are going to pave the way for government-backed digital currencies. And there's a lot of bad stuff that comes with that. There are also some good things that come with that. But I think like the banking infrastructure is going to eventually have to embrace digital currencies. Does that mean you're going to be able to have Bitcoin in there? I don't know. But like, you're going to be able to have something. I think when that starts to happen, that gets in the wallet, that gets into your phone or whatever other devices we're using at that point. And I think this like underlying theme of like additional tech that's going to kind of take place. We're also going to see huge developments in augmented and mixed reality. I'm kind of less bullish on VR, but like I think that VR is going to play a big role in the future. But I think AR is going to be a bigger piece. All of this kind of together plays really nicely into not just like the narrative of crypto and blockchain tech being like proliferating, but in particular like the gaming layer on top of that being a massive subset.
Yeah, most definitely, and it brings in that ease of use, which is the big drawdown of a lot of games now. And like you said, bringing the credit card ability, right? Bringing in as much kind of that to make it as Web 2.5, if you will, as possible, which allows you to eventually have the user base and the technology to basically help teach these people and shift people who are already invested into things in a time and a financial sense, then kind of show them the next steps, right? So it's much easier to get people from there to the next step than from 0 to 1. I'm curious kind of how you guys are specifically on Decentral Games, like how you guys are incentivizing users now. With, I know that you mentioned there's less financial incentive in terms of probably like liquidity rewards and things. But how are you guys doing that? And also you guys have done a good job of like keeping things active throughout this time the last year. Like, I think probably one of the top, if not top 1 or 2 or 3 games that have actually kept users and kept activity going on chain. So curious about kind of why do you think that's been happening? And also how, I guess they kind of go hand in hand. How are you incentivizing these users and yeah.
Yeah, I mean, I think so. There's been a lot of things that we've done that have been really critical to our success. Some of those we did on purpose. Some of those we've got lucky with, right? And then there's been many things that we did that we look back on and we say, damn, regret doing that a little bit. But then there's been like, the good side to that in the short term and then the bad side to that. And, these are all very intermingled. I think the first piece, right, is we came in the absolute like hysteria of the then play to earn kind of frenzy in last October. We launched our game. So we'd been operating for a long time prior to this building a game experience. And yeah, it was just a feeding frenzy, right, at the time. And we look back on it and we say, okay, well, we probably shouldn't have went so wild with token incentives. At the same time, it's one of the reasons why we got so much attention very early on, and it was enormously powerful for building like the nucleus of the community. But we realized that, we had to shed our skin a little bit there because there was a huge amount of people effectively just there for just the rewards. A huge amount of value extraction happening. So when the bear market started to come in, you really feel that. So that was one of the bad things we did, but also had fortunate elements at the beginning. One of the really good things we did, which I don't think we realized quite how important this was, but we were definitely conscious of it, is we did not do the whole like breeding of NFTs that just basically like hyperinflated the supply and ultimately the emissions of tokens. So we had a completely fixed supply. So all we ever did was like primary mints, where we would like introduce smaller amounts of supply at a time. Whereas I think when you look at the likes of 𝗵𝗵𝗴𝗵, 𝗵𝗵𝗃𝗃, they just stepped into hyperinflation. The only way that they could sustain it was through the Ponzi of new users coming in, right? Like that was it. So we kind of shut things down a little early, capped supply, drew backs on some of the rewards. And then what we completely shifted near the second quarter of this year was a whole new reward system. The reward system, instead of just kind of like people could come in, play for free, like borrow one of the NFT wearables and play and earn real rewards, cash out, right? Like the money printer. We instituted this kind of like idea of like you play and accrue effectively like points in a balance that then you could redeem for in-game assets, right? And it's much more about like playing to earn collectibles, which have a value in themselves and can be traded if you want, or you can then use those to earn like smaller rewards, but you have to like be actively participating in and burning in the game. Also in our games, right, like you have like one piece of this, which is that, then you have our tournament mode, which is like completely EV negative. Like that can actually scale infinitum, right? And it's like actually creates massive deflationary effects across our entire like token economy. So we have like a very rare piece in this where it's like actually very sustainable economics, incredibly rare in GameFi. That's, people talk about that, and we've talked about it in the past, like it's a really, really big thing. Let's cut the crap. It's the bare minimum. Like you basic this binary. You either have that and you can go on to do something on top of that, or you don't have it and you're going to die. It's just a matter of when, right? So the next layer on top of this is where I think a lot of games are trying to like do stuff, which I applaud, right? It's like AAA game studios building these like incredible, like RPGs and like amazing like games that are trying to compete with Web 2 with these Web 3 game elements. It's crazy difficult to build a AAA game like that is just a runaway success. Like for every one Fortnite, there's like 500,000 like that die, if probably millions, to be honest, right? So That's really difficult, really expensive, really complex. We're not a AAA game studio, right? We have a team that's built out of experienced game designers, metaverse developers and engineers, obviously like Web3 and crypto experts and poker experts. And we've taken a game that people know and love, and we're bringing it in a new experience, a new format with that additional value layer that I talked about on top of it. That is what kind of keeps people involved and enjoys like this game that we can keep building on and iterating on. And our focus has been so much less on like just pure rewards and actually like building out really interesting gamification into the game. Like the community really care about like their standings. They can earn a piece. Our governance is surprisingly active and has remained very active. We have a full DAO with a treasury that we fund a lot of our development through. We're one of the largest landholders inside Decentraland. Even at kind of the current market value of like treasury assets, I think we've got close to 20 million in our treasury right now. We have runway to last us through the bear market. And we generate protocol revenue, right? Like, you know, we're going to probably do somewhere between like $3.5 million this year in just like protocol revenue, right? Most games aren't doing that. And you can see that on Token Terminal, like completely transparently. We have external revenue through metaverse advertising. We've diversified revenue. We have like the third largest Polygon validator node. We have an ETH validator node, right? Like we have like in-game like spend, of course, which is huge for the internal kind of non-inflationary like token burns, things like that. It's a very diversified kind of set of revenue streams that we're creating that mean this is not just sustainable from, like token inflation, but actually as a game studio, an ecosystem, a DAO, all of this together. I think that's a piece of why we've been able to keep the momentum behind kind of what we're doing.
Epic. Well, thank you for the explanation, and wishing you the best for growth in the coming months and years, as well as we kind of push forward into new times with the market and just pushing forward with the tech. So definitely going to have our community check you guys out on Discord, Twitter, get involved on the website, can jump in and start playing instantly just in the browser. So yeah, thanks for coming on. And it was a pleasure, Matt.
Yeah, pleasure was all mine, guys. Thanks, Rob. Thanks, Andy. And yeah, I'm sure I'll be seeing you in the wonderful world of crypto Twitter.
Cheers, Matt.
Cheers.